Let's look at the question section B, June mock exam. So we've been told to just read this question clearly. So we've been told to use only exhibit 2 and in accordance to IFRS standards, explain with the calculations, explain and calculations how to correct the treatment of Sal's company. So they haven't said the area, you haven't been told what to calculate, you know? So but you need to identify from the by reading it which chapter that applies and what is the requirement that we need to identify by reading the question, right? So and also remember explain and calculation. So when you have explain and calculations, much better that you would first do the calculations and also you need to explain, right? 5 marker, so probably 2.5 for the calculations, 2.5 probably for the explanations. That's the guide that you should assume, right? And so we've been told here, and also it is for the 31st of December 2017, right? This is an important date, and they want us to do for the consolidated financial statement for the year ended 31st December 2017. Now let's cover up and cover this and take one by one sentence at a time. Right. So the first one, it says several years ago, Enrique's company purchased 75% of the equity shares of Sal's company, right? And so 75% would give us the control, right? And we don't know when, several years ago, right? It was purchased several years ago. We had 75% as a parent. And so this was, the parent was Enrique's. So this is the parent, which is Enrique's. Right, and then therefore the subs, if the parent is 75%, therefore the NCI several years ago has to be 25%, you know, 100 minus 75, right? So they purchased Sal's company. Sal's was the subsidiary there, right? And that's so far that we have done. So nothing much we could do with these informations because we cannot calculate goodwill. Why? We don't know the date of purchase. Right, we don't know the date of purchase. We don't know the considerations amount of money paid yet. We don't know the net asset yet. So these numbers were not there. So it is not that easy for us to calculate goodwill. Moving on further, right? So it is not, it may not be related to goodwill calculations. And we still don't know what we've been asked to do. Moving on to the next part here. And now they're saying on 31st of December 2017, on 31st of December. See here, we are doing the year end for the 31st of December. So something happened on the final day of the year end, right? On that final day of the year end is what something happened. And Enrique's company sold 10% of the equity shares of Sal's. Now there has been a disposal. And the disposal date was this, you know? So the disposal date was this. So we know now we know there is a disposal. So this is going to be chapter 13. You know? So now we know this is chapter 13 that we are dealing with, right? So we know this is chapter 13 that we are dealing with. So we have a disposal now, and then they sold only 10%, right? And and then 31st of December was a disposal day. And you could see earlier we had 75% of ownership. That means we had control, right? When we had 75%, we had control over the subsidiary. Now we sold 10%. Now we have 65%, right? So 65% still above the threshold 50% mark, right? And the other way to easy approach on this, it was a subsidiary before, and it is still a subsidiary, right? So it was a subsidiary before, it is still a subsidiary. So there was no change in the structure of this group, right? The company was my subsidiary, it is still my subsidiary. So the structure did not change. Because there is no change in the structure of the organization, of the group, and it would not trigger a group profit or loss on disposal, right? Normally, when a parent company sells shares of a subsidiary, it would trigger a group profit or loss calculations, right? But if there is no change in the group structure, we do not have to do the group profit or loss. we do group profit or loss calculations only when there is a change in the group structure. That means it was a subsidiary before, it has become an associate, or it was a subsidiary before, it has become simple investment. These are structural change. Another structural change, it was an associate before, now it has become an investment. So that was losing the significant influence, right? So these are the structural changes. Whenever the structure changes, that's where that we are expected to calculate the group. Sorry, that's where that we are expected to calculate the profit or loss, group profit or loss. And on the other side, right? And we don't have to calculate if controlled retain situation, the structure did not change. Therefore, what is expected from us to calculate, we have to calculate two things. One, increase in the NCI amount. The working is going to be around the NCI. Second, the equity changes, the adjustments in the equity. These are the two workings that we need to do. Right now, we know that we need to calculate the increase in the NCI amount, and also we need to calculate the adjustments in the equity. What do you mean by adjustments in equity? That means the parent, parent has sold these shares, parent has sold these shares. So parent sold these shares means parent going to receive some extra cash by selling those shares. At the same time, he's going to give away those 10% shares. So we need to know what is the net changes to the equity value of the parent. That's what we expect to calculate. Right, excuse. So let's have this first one. So I need to first try to work out the NCI working. All I just need to find out what is that increase in the NCI amount. Now, if I just want to make this much better, I put working one, and I would put here the increase in the NCI amount. Why increase? Increase in the NCI amount. And on what date? On 31st of December 2017. Why increase? Because we know that the parent is selling these shares, because parent is selling these shares. This is known as the movement between the owners, right? So when the parent is going to sell shares, who's going to pick them up? It is the NCI who's going to pick those shares up, right? So whatever the percentage parent has sold, NCI would be picking those shares. So it is an increase in the NCI. So to find the increase in the NCI, I know I need to find out what is my NCI amount at the date of disposal, right? What is my NCI amount? This is what I need to find out. What is that my NCI amount at the date of disposal? When I say at the date of disposal, just before the disposal, what was the amount? And what was the percentage just before the disposal? These are the two informations I need to know. If I knew these two informations, I would be able to finish these questions without any difficulty. So I know the percentage is already there. So before disposal, we know the percentage. What was the percentage before disposal? It was 25%. Right? Before disposal, we know it was 25%. All I just need to find out what was the value, right? Remember what I said in the lessons. And this value, right? Sometimes the examiner would give this value to us, right? Let's see whether the examiner has given this value from this question. We know we have done this 10% loss, and then 65% is what we held, but what we are holding it, that's correct. And that control retain. We identified this as a controlled retain situation as well. So there was no problem with that paragraph. Then cash proceeds of 22 million were received from the sales, right? We know when you do the the next one we do is the adjustments in equity. What is the adjustments in equity that is needed for the year ended, right? Adjustments is needed for the year ended, right? For the year ended 31st December 2017. What adjustments that we needed, right? And so we know when we sell shares, we are receiving money. So they are saying that you have received money. How much money you have received? You received consideration received, right? Cash consideration. So you could write here as received for the disposal, right? So you could have write here as disposal proceeds as well, right? For instead of this, you could have written here as disposal proceeds. So that's there. How much is it? 22 million, right? Now let's see what they have said here. They said you received cash. Yes, they were received from the sales, right? So what is the double entry for this cash received? Cash received double entry would be we are receiving this cash from the um, NC because we sold the shares to the NCI, you know? So we received cash. When you receive cash, cash debited. We don't have to worry about the NCI. Why? He paid the cash, so we don't have to remember it because NCI has paid the cash. So cash debited because we received cash. Credit should go. Let me write it here, right? So it's much easier that you would know the double entry that takes place. So if you're dealing with 22, then we know the cash here received. So cash is debited, right? And then the credit going to go to the equity account, right? The parents equity account. This is the credit, right? It's going to go because that's what we sold, you know? So that's the disposal of the equity account. That's what the credit going to go to, right? You have a disposal and the credit would go to the equity account, right? So because you get in the cash, you know, it's a net assets, right? And so this is the double entry that we should have, right? This is the double entry that we have. So instead of having this, what they have done, they said with the other side of the accounting entry being recognized. So with the other side means they're saying cash, you have recorded it correctly, but instead of crediting the equity account, right? What you have done, you have went and put that figure in the other. So you have recorded this figure in the other income, right? So I can make note now itself, right? Incorrect. This is incorrectly within bracket. This was incorrectly. I will remember later that this was. You don't have to write this. I'm writing it for your so that you understand them clearly, right? So this was incorrectly recorded within right other income. You know the figure what we have here is the balance sheet, and so where the other income would appear in the balance sheet, right? The other income, this other income in the balance sheet would be the consolidated retained earnings. So this figure is hidden in the consolidated retained earnings, right? So we need to remove it, right? So you need to remove this figure at a later when you do the populated spreadsheet. From where? From the consolidated retained earning. Why consolidated retained earning? Because we are not having the balance sheet. Sorry, we are not having the profit and loss account. What was given to us is only the balance sheet of the spreadsheet. You know? That's what we have. So the income, other income, would have gone into the profit and loss account. You know? So that means we need to remove it from the consolidated retain. That's later, not now, right? Just was explained. You can see the right credit entry means under the equity, we are adding it. So that's the credit on the equity, right? Debit would have gone to the cash, which they have done it correctly. Let's move on further to understand this. Remember what I was to find out? I need to find out this amount. What was the net asset amount? If I can find this amount, I can find what was the increase. I can finish this off. And moving on to the next, and they're saying no other accounting entries have been recognized in respect of the share sale, right? And good, right? So they're saying no other entries have been recognized uh, with respect to the, okay. So with respect to the share sales, they're saying no other entries have been recognized. So basically what they're trying to point out here, and the changes in the equity was not taken into account, right? Most probably that was not taken into account. Let's move on. And so the next line that we need to focus now would be the next. Remember, I need to find out what was this figure. And examiner may have given this number. If he has given this number, things are much easy, straightforward, right? So here the net asset of Sal's company in individual financial statements at 31st December. Who Sal's company? Sal's is the subsidiary. Individual financial statements means in its own financial statement, separate financial statement, nothing to do with consolidations. Everything on the individual financial statements would have been recorded in its carrying amount, right? That's the issue. And then 31st December were carried at 146 million. So they are saying there is a net asset figure, right, for 31st of December. Net asset figure is given. And also South owned the land, and right. So whatever you can read from here, there is no informations about the NCI. I was looking for the NCI informations, so there was no informations about the NCI, right? Nothing told. And because the NCI information is not there for the disposal date, and if it is not there for the disposal date, I could have gone to the top, and I could have gone to the starting date when the NCI was recognized, which was the NCI at the acquisition date. That information is also not there. Why? Because if for that I need to know when, at the date of disposal, what was my NCI. See, at the date of disposal was not given. They said it was several years ago. There is no NCI given at the date of acquisition. So that information is also not there. Goodwill is also not given to us. There's goodwill also not given. Because if the goodwill was given, then I could have worked reversely to find the NCI amount. So there is no other way I could have find this amount, right? So the only option now I have is to find this amount in way of looking at the net asset. I need to now know what is the subsidiaries net asset for 31st of December 2017, right? So you could have done the subsidiaries net assets here. You could have done this way, right? Within opening up a within brackets, you could have done it, but I would prefer to do this as workings, right? So this was my working one, and this is gonna be my working two, which is the um, adjusted inequity. And now I would have this as my working three, right? So I would have here my working three, which is going to be my net asset. I want to find out what is the subsidiaries. In this case, it was South, right? It was South companies, right? South companies net asset, right? South companies net assets. What was the date? It was 31st December 2017. I need to find out the figure for the subsidiaries net assets. Now let's start this now here I need to find out subsidiary net assets. So they have, straight away the examiner, to make my life easy, he has straight away he given me for 31st of December, right? So what happened in this here, he could have given, no, it's a bit vague here, but he would have given me the year, right? So we have to assume this is 31st of December 2017, and that carrying amount was given as 146, right? So I have already, right, examiner has given me the net assets carrying amount, right? Net assets carrying amount. This figure has been given to me. What date? For 31st of December. So we know in the consolidations, net, what was the amount? The amount was 146 million, right? But we know in the consolidations, net assets would be recorded at fair value, not at the carrying amount. So whatever the fair value adjustments that need to be done, we need to bring them on. So they said in 31st December 2017, South company owned a land. It is always nice to have land in workings, right? Land would not trouble us much. Suppose if the in this example, suppose if the reporting date, suppose if those the reporting date was different. I'll show you now because I noticed some of you have issues with respect to this. See here, this disposal was taking on this date, 31st of December. And they said the land with this example, which had so we really don't know on 31st of December, company owned the land, right, which had a carrying amount in his financial statement of 6 million. So that means this land figure was not at the acquisition date figure that they are giving us. We normally take this figure at the fair value at the acquisition date. And what they have saying us now, the carrying amount of this land was, they have given the figure how much, 6 million. So we know the land figure always remains the same. There will be no depreciation. It is a non-depreciable asset. So it always remains the same. That's why I've said it's much easier to deal with land. So on 31st of December, the land was there, and in their financial statements, they put a figure of 6 million. But actually, On the acquisition here, I told you, acquisition date fair value is what is important, right? Why? Because we would take this figure into our books at fair value at the acquisition date, right? So, but then so you could see here, the examiner given us the 31st December carrying amount. Is saying, listen, the carrying amount for 31st of December 2017 is 6 million, but the fair value for the acquisition date was 18 million. So these two dates are not the same, right? But what we need to understand, the fair value, the carrying amount would never change for the land. It's always the same. We don't going to depreciate it. So that from this sentence, we just need to conclude the carrying amount for at the acquisition date was 6 million, and the fair value for the acquisition date was 18 million. I hope you understood that clearly. See this, the carrying amount they gave me for 31st of December 2017, right? This is not the same as the acquisition date. Fair value adjustments are done at the acquisition date, but we have the fair value at the acquisition date. That's perfect. But we don't have the carrying amount for the acquisition date. They did not give, but they gave me for 31st of December 17. So because it is land, this amount would never change. So this would 6 million would be the same for the acquisition date. So there was a fair value adjustment that was missed out during the land. So I would have the land fair value adjustment. What was the amount that we missed? Land fair value adjustment. Right, land fair value adjustment. And then how much is it there? So we know the land fair value. We have 18 million, which was the US dollars, and then minus, which we have 6 million. That is what was recorded. So what was missed out, the fair value increase, is actually the 12 million was missed out. Right, that 12 million need to be brought into account. So that is it. There was nothing else there, right? There was no other information there. And if he wants to worry about, the deferred taxation, there was nothing mentioned in the deferred taxations. If the examiner do not mention any corporation tax in this exhibit, you do not have to worry about deferred taxations. There's no implications there, right? And so as a result of this, now I have the total of my net assets, right? So I have a total of my net assets. What was my total of the net assets here? Our total of net assets has 158. Right now, this is my net assets total when on this date, right? So I know net asset. This is the net asset of the subsidiary, right? On what date? This is the fair value of the net assets, right? Not the carrying amount. Fair value of the net assets. Net assets are right here, fair value. Net assets at fair value, right? This is the net asset at fair value. This was for this date, 31st December, right? I'll write it here. But then more importantly, we know within these net assets, we have not added the goodwill. So this would be excluding goodwill. This is excluding goodwill. I haven't added the goodwill there because it is excluding goodwill net asset that I have. Now I need to make a decisions next. Do I have to bring goodwill into it? And you see that in this question, there was no information given for us to calculate goodwill, right? Now you know why. That is why the examiner here has said what method that we are using to measure the NCI. We are using to measure the NCI. See what method? Proportionate share of the fair value. Don't get confused here, right? Never get confused. Sometimes students make mistakes thinking this is the fair value, right? Read carefully. So this is what you need to read. A proportionate share means a percentage of the net assets. The net asset is always at fair value. You know, once you do consolidations, subsidiaries net asset would be recognized in its fair value. That's what we have done. This is the fair value of the net assets. So when we need to take a proportionate share of the net assets, that's what we want to measure the NCI, right? So let me also point this out here, right? Because they're saying we are using proportionate share. That means what the examiner wants me to do, he wants me to do a partial goodwill method, right? Partial goodwill method to measure the NCI. So the NCI is measured using partial goodwill method. So right, so this is what the examiner is telling me, right? He's saying the NCI, right, is measured, right, using partial goodwill method. This is what the examiner's instructions are. So what do you mean by partial goodwill method? Partial goodwill method means, you know, the NCI figure would only, right, the NCI figure would only represents the money the NCI paid to buy the subsidiary's net assets. That's it, right? So the money the NCI has paid, right? The money the NCI has paid. So here, right, if I using partial goodwill method, right, the money the NCI has paid. NCI would, when NCI pay money to buy shares from the subsidiary, NCI would be paying for two things. One, payment for, right? One, the payment for net asset of the subsidy, right? Net asset, buy the net asset of the sub, right? This is one. And then the second, they would have paid, right? They would have paid, the payment is for buying the goodwill, right? Payment for the goodwill, purchase of goodwill. Right? That was the purchase of net asset. This was the purchase of goodwill, right? So these are the two possible, um, ways in which the NCI would contribute to buy when NCI pay the NCI amount, right? The amount of NCI would represent these two figures, right? I'm just showing you now. I'm just gonna want to explain. I think I did this yesterday in class too, right? So when the examiner gonna tell us we're gonna measure the NCI only by using partial goodwill method, that means the examiner is telling us the NCI amount would only represent the money that was paid to buy the net assets, not the goodwill, right? So we are using partial goodwill method. So the NCI here we want to find that would only represents the net assets, not the goodwill. So here I don't have to go and find my goodwill amount and then have NCI including goodwill. Now this is what you need to check the previous question that I did. The questions in the exhibit, questions in the technical article, questions in the one of those mock exams, where that we were asked to use the full goodwill method. If you are using the full goodwill method, I also need to bring the goodwill into this. So that NCI would only be calculated net asset including goodwill, right? On that figure is what I'm supposed to calculate the NCI. Here, I'm using only partial goodwill method. So NCI would be calculated on the net asset excluding goodwill, subsidiaries goodwill, right? I hope it's clear. Now, the second point, let me, before come on to this, when you're measuring NCI, right? When you're measuring NCI at partial goodwill method, you need to understand what would be the impact. Because of because of this partial goodwill method, the things that will get impact, one is the goodwill. The main here is the goodwill. We are not bringing the goodwill into it. Because we are not bringing the goodwill into account for the NCI, we cannot charge, right? We cannot charge any goodwill impairment on NCI. We cannot charge goodwill impairment. If we have any goodwill impairment, we cannot charge that goodwill impairment, right? Goodwill impairment cannot be charged. On who? We can't charge the goodwill impairment on the subsidiary. We can't charge the goodwill impairment to the NCI, right? So let me remove this because it's getting too close. This is where I got distracted. Right, let's move this a little bit. The reason I'm saying it because you need to know what was the impact when you're using partial goodwill method. if you're using partial goodwill method, and if you suffer anything related to goodwill cannot be charged, because why? NCI figure did not have, NCI's amount did not have that goodwill. So we cannot charge any impairment losses to the goodwill if there is any impairment losses. That's one. Second, when you have a subsidiary, foreign subsidiary, and if you have the exchange gain on goodwill, translation gain, right? Suppose if you have exchange gain, right? Suppose if you have exchange gain on goodwill translation, right? And this also cannot be charged. This also cannot be charged to the subsidiary. Why? These are related to the, these two items, right? These two items are related to the goodwill, and these items are related to goodwill. This is one, and then this is the second. These two are related to goodwill. So we cannot charge the impairment loss, and also we cannot charge any gain, exchange gain or exchange losses that relates to translation of any goodwill of the subsidiary. We cannot charge that to the NCI, or we cannot give gains to the NCI because NCI figure did not have the goodwill amount, right? So it's clear. All the other depreciation charges, or if we have any impact on any expenses that going to take place during the year, all those need to be shared split between the parent and then the subsidiary, parent and the NCI, right? So I hope this is clear. It's nothing to do with so far on this question yet, but then I'm explaining this, you understand them clearly, right? So don't get confused, right? So now we know this is the amount we want to find. What was the NCI amount here, right? So this would be based on the net assets and net assets at excluding goodwill. This is what I just want to find out. So I know easily now I can find out this number, and now I want to find out the NCI, and that's the NCI figure at 31st of December, right, at the date of disposal, 2017, gonna be equal to 158 million US dollars. Write them properly because we don't want to use professional skills marks, and then millions, that's times, sorry, in millions, and then that's times percentage was 25%, and that was 25% was the NCI amount, right? So this at this point, right, at this point, like I said, you could have done it straight away. You could have done 10%. This was the 10% is what we sold. 10% is what the parents sold. 10% is what the NCI gonna pick up, right? Here, the 10% is what the NCI gonna pick up. Whatever the parents sold this is the figure the NCI gonna pick up, right? So that increase, we could have done it straight away, but I would like to do this way. So we know it was 158, and then that's times 25%, right? That's done 25%, and then that gives us 39 point in millions, right? 39.5 million, right? So that was the total amount here. That was the total NCI, 39.5. We know that is for 25%. Now I can find what was the 10% increase. So like I said, you don't have to do this. You could have simply skipped this line, right? And then only have that number. And I always prefer to do this way, because this is what how always have a consistent approach. Don't keep on changing the way that you perform questions, changing every question. Then you would not have a method for you to perform in the exam. Why? Because if you're going to change your way of doing calculations for every single questions, looking at the solutions would be done by different markers. They would present them different ways. So you don't have to keep changing. Good example would be the technical article, that how it was worked out yesterday, where the NCI figure they added on the top. But when we did the workings and the workbooks and also the past paper solutions, you would see that it was done exactly the way we have done in the workbook. So markers keeps on changing. So they will write different ways. So you don't have to change. You keep consistent. Right. Now we know this was 39 in US dollars. This was 39.5 million. Right. And I know this 39.5 million is equal to what percentage? 25%. Right. and I need to know what percentage of increase. I need to know what was this 10% there. So if I can find out the 10%, that would be the amount NCI is getting it from the parent, right? So I could simply find this amount here. If I can just quickly move this one step here, right? So I could easily find this amount too. And so easiest way to work this out, right? The amount going to be how much? It has to be definitely, without any doubt, 10% of this, and 15.8. You can quickly put 10% of it, 15.8. Or if you want to double check this figure, then you can write it as 39.5, and so it was 10%, though divided by 25%. So you could simply see that's a 15.8, 10% of this. Straight away, you could have done this. This would have saved time too, right? And then if the question asks us to find what will be the NCI amount thereafter, because you sold the subsidiary, so the carrying amount of the NCI, right? So here we didn't lose the control, so the NCI is still going to be on our balance sheet. So so the carrying amount of the NCI would be these two figures. Earlier opening balance was 39.5, and with that, sorry, right, with that, I'll write it here, others I don't want, okay. See, earlier it was 39.5, and with that, we would have added 15.8, right? That would give me 55.3. And what would be this 55.3? This figure is the figure that I would have as my total in the on the balance sheet, statement of financial position, as NCI, total figure. Remember, total figure. Suppose if I already have an NCI figure on the balance sheet, and then this is the figure that would be added onto your pre-populated spreadsheet, right? So this would be the NCI amount after disposal. NCI after disposal. Right? This is the NCI after disposal, and this amount, I'll write it in green. Then because if we already have an NCI amount in the balance sheet, that's going to be the case. So this need to be added, right, to the NCI pre-populated spreadsheet, because pre-populated spreadsheets already have some figures in it in a pre-populated spreadsheet. Hope that's clear, right? So this is the amount that we would add in the pre-populated spreadsheets at a later point, right? This is what would go there. So we have done this now. This was the increase, right? So we know this was the increase in the NCI amount, and we did this calculation because we want to find this amount, and this increased amount is exactly the amount that the parent gonna lose, because it was a movement between the NCI and then the parent. So whatever the NCI picked up was actually coming from the parent. So this was the narrative going to be the same as before. We would write here increase in the NCI amount, right? And then we would put the figure within minus 15.8, right? This would be minus 15.8. And then I will be able to find the difference between these two. So the difference between these two now, 22 minus 15.8, you get 6.2, right? All right, 22 minus 15.8, then we would get 6. What does it mean? We paid 22 million, right? We received the cash, we sold shares. What's the percentage we sold? We sold 10% shares, right? So to sell the 10% shares, we received cash 22 million, and then we gave this equity to the NCI, right? So we lost on our equity 15.8, cash came in 22, it would increase the net asset, and the net increase in the net asset is 6.2. So this is the net adjustment. Right, this is the net adjustment thing. So that figure is 6.2, net adjustments in the equity, right? That's 6.2. So that's done. And then if it just wants to, just to give you more sort of an idea on this, if I just wants to give you the double entry for this, I'm just giving you all this for your, for your knowledge, right? Because you don't expect the same questions to come up, so you need to know, have a good understanding. So what would be the double entry for these transactions? For this was my working, right? This was my working three, and here when I did this calculation earlier, when I use this number here, I could have put this number from my working three, right? This came from my working three, right? So then the marker no. So what is the double entry for this, right? So the double entries, come on, double entries, right, for this. And the first one, we are receiving cash. So we know we're going to get cash. Cash will be debited, right? We debit the cash. How much cash going to be debit? We're going to 22 million. That's done, right? And then you see the equity. What has happened to the equity? We have a positive, and equity is a positive adjustment. Equity is a credit balance, a liability, right? Need to be given to the shareholders. So it is a credit balance positive. We are increasing it again. So equity would be credited too, right? Equity would be right here. Equity would be credited to pair group equity or parents equity be credited. How much would be credited? 6.2. And then the at the same time, what has happened now? You know who who took these shares from us? It was the NCI that has to see increase in the amount of the NCI. Right? NCI is now having that share, so we owe more money to the NCI. So NCI is a liability. Increase means it's going to be on the credit side. So we're going to have NCI, right? NCI, the credit side, how much is going to be? 15.8. Now, if you can check the double entry totals, right? You check these double entry totals, and you can see from this is 22, right? And then the other side also 22. See that this total is also 22. So this is the debit side, and this is the credit side. So you can see the double entry for this is also right. We don't need, we've been not been asked double entry, right? So just the take we're going to take after, once we start the pre-populated spreadsheets, you would remember that we need to add the NCI figure on this, right? On this date, NCI need to be added. And then thereafter, we also need to consider taking this into, we need to check whether the cash has been added. And if the cash has been already done, we don't have to worry about it. And then this NCI, right? We know this is the increase in the NCI that's need to be added. And then the parent equity need to be added with 6.2. So these are the adjustments that we would make. So basically, when you do this question 3, you could have simply recorded these on the pre-populated spreadsheet at the same time, right? Or you make a note and then you know that you would be able to record them later, right? And so that's how far that we have done. I think that's much I need to cover with respect to this. Right now, you can see here the solutions which they have done. This is solutions from the ACCA's mock debrief solutions, and you can see 6.2, and then you see is still continue. So you need to, you've been asked to explain, right? I think these explanations, I remember she was saying, she was making just bullet points there, but you need to explain clearly. And when you do explanation, see, they're saying still control, subsidy, you just need to explain, right? And you would say about the IFRS 3 business combinations. And then you would say there has been no structural changes taking place, that basic threshold has not been crossed. This is a controlled retained situation. You would also point out a controlled retained situations. You would not require you to calculate group profit or loss, but you have to calculate how the equity movements between the member owners of the subsidiary, between the subsidy, between uh, the NCI and then the subsidiary parent company, right? So the movements is what you need to make note of it, right? The shares ownership between them, the subsidiary, right? So that's we would point out, and then of course then you would explain each of those calculations, right? So you can write a subheading of NCI, and you can simply explain how the NCI has been worked. It's 5 marker. You have to be very quick, right? You would quickly say, explain how the NCI was worked. So NCI was based on NCI was based on the net assets, right? Because no other figures were given. So more importantly, you need to point out we are using partial goodwill method, right? Partial goodwill method. Because partial goodwill method, we don't have to. The net asset need to be at excluding goodwill figure to calculate the NCI figure, and then the rest is um, is nothing. So then you also need to quickly explain what is the adjustments that is taking place here, right? So this was the first one. This was the first one. So this was the second one. And also you are expected to explain, right? Always remember, you don't explain, you score only half a mark, right? You need to explain clearly, right? With subheadings. So that's here. So no calculation of goodwill is needed. Other income needs to be corrected. We pointed out transactions between owners. And so these are the points that she's saying you need to make. And then the calculation is being done, right? I hope that's clear, right? Thank you.